Hello everyone and welcome to this YouTube channel. My name is Mike Mbaye, a seasoned Forex trader and trainer here at Wins with Concept. And in this video, we'll be looking at what really moves the market. You see, the Forex market is driven by various factors that influences currency prices as well as market movement. And basically, I want us to look at the forces that are always in play in this Forex market. Now, one of the factors that usually moves the Forex market is forces of demand and supply. As you all know, demand and supply actually affect the currencies of different countries. Example, if there is high demand of something, the price usually moves up. And if there is high supply than the demand, the price will always go downward. Likewise, now even in the Forex market, the demand and supply of currency pairs of currencies usually influences the price of that currency pair. Okay. Secondly, another key factor that usually moves the Forex market is the GDP, or what we call economic indicators. Now, there are various data and reports that are released each and every month, and these reports and data usually gives us a glimpse of how the economy is faring. You see, some of these reports that are released monthly or semi-annually in the Forex market, they include the GDP, we have the employment data, we have the unemployment data, we have the interest rates, and these data usually affect the value of a country's currency. Let me give you a very good example. If there is employment data that is being released, that employment data gives us a glimpse of the number of people that have been employed within that particular month or within that particular area. Okay? And if the number of people that have been employed in that particular month is higher than what was in last month, you see that one is showing us that the economy is faring well. That's why the economy is able to absorb all those people. Okay. Now, when that data is being released, it usually affects the value of a country's currency. Okay. Also, if you look at reports such as the gross domestic product, that is basically the total number of goods and services produced in an economy. If a country is experiencing economic growth, that will be reflected by the growth of the gross domestic product. And this data, when it is being released, the market when this data is being released, the market always reacts to this kind of data by affecting the currency, the prices of a currency. Another factor that usually affects the currency values is geopolitical events. Okay, geopolitical events such as political stability, international relation, or global conflicts can really affect the currency values. Okay, like example, if a country is experiencing global conflicts, such as if there is war, you see something like war will affect the economic activity of the economic activities of people. And that now will translate to the currency of that country depreciating. Okay, so political stability, global conflicts, or international relations can really affect the value of a country's currency. Okay. Now, another thing that really affects the value of a country's currency or determines how a country's currency can change is actions by the central bank, or what we call central bank policies. Okay. Actions of the central bank, either to increase the interest rates or to decrease the interest rates, can affect the values of a country's currency. Okay. Like, for example, if the central bank of a country decides to increase the interest rates, that one will attract direct foreign investment. Okay. Also, if the central bank of a country decides to reduce the interest rates, that one will discourage investors. Okay. And when these reports or these policies by the central bank are initiated, they can affect the value of a country's currency either positively or negatively. Okay. You see, perception of people or perception of traders towards the news, towards economic forecast, or towards the trends can really affect the value of a country's currency. Okay. Let me give you a very good example. If people's perception about the economy is good, or maybe people are perceiving that their currency, the economy is doing well, it can really increase the value of a country's currencies. And if people's perception or there is global events such as the way that right now you're having tariffs, that one can really affect the value of a country's currency. Okay. Now, when this data or when this data is being released in the public, it can really move the value of a country's currency. Okay. Now there are things that can really move the value of a country's currency, or that really move the market, is capital and trade flows. Okay. Now the movement of currencies across the border, either through investment or through demand and through the demand and supply of different instruments, of different goods and services of the country, that one can affect the demand as well as the valuation of that prices. Okay. Now, those are some of the things that usually moves the Forex market. So, is the take home for this video is that if someone will ever ask you what really moves the Forex market, what are the forces in play in the Forex market that makes those currency pairs to move either upward or downward, at least you'll be able to tell them. One of them is forces of demand and supply. You'll also be able to explain to them market sentiments. You also be able to explain to them about the geopolitics and how it affects the currency's values. Also, you'll be able to explain to them about the central bank policies. Thank you for watching. See you on the next one.